Today is the final session for our Latvian Business Angels course for angel investors. May I ask how many of you participated in all previous sessions without interruption? 1, 2, 3, 4, almost anyone. That's great. To uncover the intrigue, those who participated in all or most sessions, first of all, will have an electronic certificate about completion of this course. Second, probably some more perks from emails later to share on WhatsApp and email newsletter. Okay, you know that we started this kind of angel investor course already 3 years ago, already in 2023. And it actually make Latvian Business Angels Network much stronger than ever. You see, then every year from 10 to 30 new business angels are joining Latban, investing in Latvian and not only Latvian startups. And I must say that we are getting close to our friends, partners, and let's say competitors to Lithuanian and Estonian Business Angels Network. I am an active member of all three, all two except Latban. I'm also the founding partner, the founding member of Lithuanian Business Angels Network back in 2018. Sorry to say, they are moving much quicker than we, both Lithuanians and Estonians. What does it mean? It means that we must increase our speed. We must increase the amount of money we are putting in our Latvian startups with the help of Ansis Pridzens and his special purpose vehicle investment fund. And probably one day we can say, okay, now we are even better than Estonian and Lithuanian friends. What to expect today? Very brief words about finalizing our course. Then I hope not the boring but very sharp discussion between three of us, including your questions. I kindly ask you not to sit quietly and to listen to these three gentlemen, but to put your questions, to, let's say, put your arguments, not to sit, as I said, quietly and think that everything that we are talking about is the truth. You know, in venture capital, there is only one truth: the money from your exit, the return on your investments. I can say this because I put my private money into 20 Eastern European startups since 2019. I got 3 exit, one at 1x, cash on cash. The founders just returned the money that I invested in. 2 exits with less than 2x multiplier. So I barely get back 25% of the total amount I invested in startups. Almost 5 to 6, I don't remember exact number, write-offs when the startup has been closed. And still 10 zombie startups in my portfolio. Probably they will get me some return, probably not, I don't know. But what I got is much better than return on my investments. First of all, a lot of friends, great network, and together with my friends and Latban board members, we made it from 39 members in 2022 up to 100 for this current day. It's worth it, definitely. And last but not least, money is what we are getting back. Experience is what we are getting back instead of money. I already told you a bit about myself. So now I want to pass the second microphone to other panelists, to Artis and Waldemars, to introduce themselves and to, let's say, to say what to expect from our today's discussion.
Hey everybody, I'm Artis. I am a VC investor. Investment manager is the official title at Vendep Capital, which is a Finnish venture fund. I'm sitting here in Riga, but we do investments all over Nordic and Baltic region. We typically do seed stage investments, so where companies have some traction, but also play into some pre-seed, so very early stage investments as well. I don't know how long should I do this, but maybe just so you get an idea.
No rush.
We
We've got
are
enough time.
yeah, okay. We are now investing out of our Fund 4, which we launched last year. The size is 80 million euros. We're going to do about 15 to 20 investments. Most of the investments actually I've done are in the Nordics, Denmark, Finland, Sweden. I'm doing a deal now in Lithuania, so I could, give some examples as well how we are doing there. And we already have returned our funds 1 and 2 to our limited partners, so 1x, 1.5x on like a rough basis there, and many more companies are still to exit those funds. So what I'm saying is I think a good path so far, and yeah, just trying to keep up the pace of investing. And kind of our thesis is that we are rather concentrated investors, so we don't do a lot of deals. We really double down on deals a lot. We like to be long-term partners in the companies. And we also very much focus on B2B only. So B2B software, B2B SaaS is our piece of cake. And that's how we started this fund. And we've been doing this for more than 13 years. I've been at the fund for more than 6 years already. So that's maybe the brief background.
So you were an investment analyst to Vendep already when I get to Latvia and start working with Latbank, right?
Yes. So I joined in 2020. I was an investment analyst and kind of moved up the ranks.
That's great. Thank you, Arti. Valdemar?
Hi, glad to see you here, and some familiar faces, and I'm sure we will make friends and probably co-investors with others that we haven't yet. So I'm in Latban since 2016, I think. Been seeing a lot of deals on Latban and different and evolution of angel investing in Latvia, which is also a separate topic, very interesting. I've learned from that a lot, and that also took me to VC side. For 5 or 6 years I was running a deep tech investment fund, and then stepped down and returned to angel investing and more business side, business building side. Well, yeah, my topics, my interests in angel investing and aligns kind of with my business interest, which is education, productivity, biotech, biomedicine, and my specialty is super early stage, I would say, ground zero or incubator phase. I do small tickets in companies that are not found yet, incorporated yet, mostly, or are just incorporated. But for diversity, I also did later stages and also invest in other as LP in other funds. I had a couple of successful exits that that put me on positive balance still, but we'll see how it goes in the future.
That's
Hope to
great.
stay there.
So to start and to make our discussion less formal and more close to the real life, first of all, I don't want to put loud words how it is great to invest in early stage startups, because all of us know that if you want to have something really great, don't spend your money on startups. Go to casino, play roulette, and in this case, you probably get even more money rather than investing in early stage startups. And champagne and cognac is on casino, not on your own. Okay, Valdemar, let's check what was wrong when you started angel investing, and can you suggest from your personal experience something to our friends who are just starting investing so they can not make your mistakes but make their own mistakes?
What is wrong? You mean what I did wrong?
What you did
Okay.
wrong, or what you did not as expected, and the result
Yep.
was completely surprising you in a bad way, I mean.
Yeah, great question, and I have a straightforward answer to that. My first investment was not well considered. It was more out of passion. But the biggest problem with that was that it was in a single founder startup, and that turned out to be the reason of fail of that startup. So the founder burned out. He also was not able to manage all the operations when things were starting to go well, and that led into things start going bad.
Okay, and how to avoid this situation?
Don't invest in single founder startup.
It's still true for these AI-related times, you mean?
I think so, because there are too many risks associated with a single person being in charge of everything and being the center of everything. So if something goes wrong with him or her, like sometimes cynically we can say bus effect, or something like that, then it all is managed. Or also, let's say, if you think about productivity, one person can handle less than 2 or 3 people. So it's and when you need to grow fast and move fast and manage a lot of uncertainty and processes in parallel, so committed team helps.
You know how I name it? The so-called bus factor. So you invest in this single founder, and what happens if this nice guy will get back to the street and get straightly to the bus? So what will be with this startup if he get to the hospital for weeks or for months? Okay, Artis, when angels are investing their own money, people on the VC side, you are investing some others' money. You played already different roles in a venture capital. So can you please recap at least 3 things you did wrong in different roles? I mean, when you were an analyst, you probably put the positive analysis on the bad startup, or vice versa. You ruined the fundraising for a good startup, and that startup finally became a unicorn, but without venture capital. And if you can say about other mistakes you made in different roles, currently you are a principal, as far as I remember.
Yeah, the investment manager.
Investment manager, okay.
It's a good question. I mean, I must say that for the first maybe 3-4 years, really the whole learning curve was to really differentiate between what can be a venture funded startup versus not. And by that, I mean, there's a lot of factors that go into it, but obviously you are looking for something that grows fairly well, fairly quick, and fairly big outcome is needed for that. So I think just building the muscle that you understand, what are some of the signs of how, startups look like from the outside, from the inside, when it comes to, can this become venture scale? It's obviously, we at VC have different playbooks for this, but at least, a billion, $10 billion market that you're going into, being able to export your product fairly quickly across borders, being, I think, software first, with potentially high gross margins is something that you kind of look at quite a lot. So those are really the things that I think I spend quite a bit of time, getting into quite a bit. And then maybe for some of the wrongdoings or anti-portfolio cases, I think I agree with Volmars that at these stages, it really is about the founders, building those relationships with people, with founders who are starting companies. So kind of also your scanner for understanding people, are they doing the right thing? Is this a single founder case? Can they handle this? Is really, really important. And I don't think that there's like a good playbook on how to handle this, but some of these things like maybe avoiding risks where there's a single founder. I think we've been to some cases where some conversations with founders are not being good, but then at the end, they build a big company, so you start thinking like, what was wrong there? We didn't really have a great relationship, and they sounded like they didn't want to build a big business. So it's a lot of these different things that at the end kind of bite you. So you need to really build, I think, a really good relationship with the founder, and that I spend a lot of time as well. Most of my time is like a sales job. I just basically build, go out there, meet people, and make sure that we build some sort of relationship, and that's how the deals get made for us as VC funds. So yeah, it's those things that I think really matter.
May I ask about the cases? If you can, then answer. If not, then politely reject my question. When you were completely sure that this particular startup is great, and you tried to convince the investment committee, but the, let's say, the older partners said, Artis, it doesn't work, you didn't understand the very important point, blah, 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 and we won't invest in this startup despite your particular opinion, and vice versa. When you said this startup is not worth investing in, but the partner said, doesn't matter, we will invest in this startup.
Yeah, you mean just like illustrate how, if I had those kind of cases, and yeah, I've absolutely had them, those kind of cases where I brought something and it gets killed internally for us. But I mean, the reasons are actually the first thing that I said. We are such a niche asset class that we play into. We are, venture funded cases. We're looking for outliers, to be honest. I think we screen about more than 1,000 cases per year, and only maybe, I would say, 3 or 4, get through the cracks, and we're really interested to do a deal with them. So just looking at those outliers is the game that we play, and that's the exact reason maybe why things get killed at investment committee for us, because we don't see a venture path for that. It's typically the market that is a big blocker, because sometimes there is also private equity that plays in this market as well, but it's not enough for us as VCs. We need bigger outcomes than that. So yeah, just making sure that you see a path toward this becoming a really big outcome is just, yeah, it's the biggest thing in this game, to be honest. You're looking really for outliers. You're looking for a needle in a haystack. So it's that kind of business.
Thanks, Artis. You see that I will be trying to detailize my questions because, frankly speaking, I hate when people putting out the, let's say, common words. I really love to learn from the real cases, from the real persons. So I will continue asking questions until I get the detailed answer on the particular cases, not from the common knowledge. As for me, and I'm encouraging you to do the same, 5 minutes more for you to warm up, to take from your heads your own questions and drop it to me, to Valdemars and Artis, because we are not talking to each other. We are talking to you to transfer the knowledge, the expertise, and our humble opinions. If you ask me what was my main mistakes at the very early days, you know what is even worse than investing in a single founder, as Waldemar said? Even worse.
Into family?
Exactly. You know the secret? I was completely sure that no one will guess what I mean, because it's kind of paradox. When you're investing in a couple of founders, you're investing not in a single, but half of the founder. Because why? Because when the things are going in the right direction and everything is clean, nice, getting to the better, okay, it's still 2 co-founders. But when something is getting wrong, and for startups it's quite a default case, if something can get in a wrong direction, it will. So immediately, instead of 2 co-founders, you are getting the half of 1 co-founder, because those couple are start arguing to each other, saying, I said you to do this way, and you did it in this different way. I was right, you are wrong, and that's kind of a problem. And I did this mistake even twice. Not my personal fault, just lack of due diligence. Because in both cases, those lady and gentleman, or gentleman and lady, they were a part of the founders team. They possess 2 different surnames, and I was not able to start questioning them tough. Okay, are you a couple? Or probably, are you in the relations, let's say? It's ridiculous. Who am I to ask such kind of questions to these great founders? But, and I see that Ansis is still smiling very broadly, it's really a part of due diligence, asking not very polite questions, but we have to do this. And moreover, if you see that in investment memo, some kind of question are not uncovered or were not asked, so please ask yourself why, for example, this lead investor didn't ask founders about, let's say, this special point. Probably he already knows the answer, but wants to keep it covered for different reasons. Doesn't matter for what. Waldemar?
I want to add to that because that's really a tricky topic. I agree, and I've been looking for those romantic ties in when we're managing fund, especially in deep tech. So I just wanted to help them. So how to check that? So if that's an uncomfortable question, from my experience, we just start with how did you meet? How did you meet? What is your internal relation? How often do you, like trying to trace down some inconsistency or some trace of that there might be some extra relationship between them. What do you think? How do you track? What questions did?
Frankly speaking, it didn't come to my mind. The very simple question is, how did you meet each other, and why did you decide to work together on this particular startup? And when we see, let's say, two clearly different people, doesn't matter, ladies and gentlemen, doesn't matter who, CTO and let's say a hacker, a CTO, and the CEO, a hustler, let's say, we can easily understand the hustler needs a tech guy to create, let's say, a piece of software, right?
Yes, and the idea behind those questions is that you don't ask those questions out of curiosity, but it's more like investigation. When asking those simple questions, unsuspicious questions, I'm looking for some cracks, for some inconsistencies, for some red flags where I can catch them. That's that.
Like in a movie series about Columbo detective, right? He looks dumb, asking dumb questions, but actually it leads to the positive result. Okay, any questions that came to your mind and you want to ask to the panelists because we move further? Not yet. Yes, please.
So you mentioned before this bus effect, right? But when you spend so much time with this founder, you can guide him, you can help him to find maybe partner to split this, burden of the business. Why?
So do you help somehow the single founder before investment or after investment that you put in to find the co-founder or more co-founders?
Yes, now I would do that, but but back then, 10 years ago, I didn't have that experience, so I didn't think about that. Currently, if I would see this startup was very appealing and perspective interesting, that would be, I would say, precondition of investment that he or her or she should add to the team a co-founder before I invest. I could help with that, but that would be precondition of investment to build a team before I invest.
That's great. Okay, let's move on because we already touched this part of questions. Artis, let's start with the next one. For me, and I suppose for Waldemar as a business angel, investing in startups is completely unpredictable. It cannot be formalized because otherwise we can play this game, as I said, on a public stock market, doesn't matter. So, gut feeling, your intuition, or the clear marks, clear checkbox, anything else, the system that helps you to formalize to invest or not to invest. What it is for you, how you distinguish the first from the second, what is more important for you as the gentleman who is playing with others' money, and if you see that your system says you have to invest in this particular startup and your gut feeling says no, how you, let's say, deal with this situation?
Yeah, I think maybe it's good to put this disclaimer that we are playing with different people's money. I think we have different expectations also from the companies and how much time we put into them. Basically, just so you understand, I mentioned we now have an 80 million euro fund. We have promised our limited partners that we will return them 3x, so we have to return them 240 million euros. That means, we have to have outcomes, I would say in the area of 1 to 5 billion euro valuations where we actually make, those kind of returns. And then, when it comes to, what was I lost the question already. I just wanted to put that disclaimer to know that, we play
Once
a bit
again,
of a different game.
Gut feeling,
Yeah.
is it important?
So
or the system, is it more important?
Yeah, so it really is about, a system. We try to de-risk this as much as possible. I think gut feeling definitely is not the case for us, and that was what wanted to give this disclaimer, because we try to de-risk these things a lot, and that means we look for, traction quite a bit already, at even early stages as venture capital. We as a fund, we don't really play with, these very early cases where a founder just has an idea and, we put checks in. So we really come at the stage where maybe they have like 3-4 customers, they have proven something at least, that they can sell this. That means that is one big validation for us. Then, as I said, other validations as well play a big role there. Like, I think you were very much on point, single founder or dual founders, we obviously want to be a dual fit, and I think for venture, really the preference is one of the founders to be technical, some sort of CTO technical role, somebody who can actually build software. So another red flag would be outsourcing your development to maybe, some tech outside of the company. That's a complete red flag. We would not go into that type of investment. So it is a bunch of these checkboxes that I now take for granted, but actually now that you ask, I have to think about, because, for me, it's just automatic. If I see it, it's a pass. So outsourcing tech, single founder, as you said, couple is an absolute red flag for us. Some traction is something that we want to see. And I think then the next really big thing for us, at least the checkbox to fill, is this ability to export, right? And by that, I mean attract customers from outside of, ideally Baltics, right? Big markets is especially useful, if they have something in the US that they can prove, UK, Germany, all of the Western markets, big markets, because that's where we play as venture investors. Those are the markets that are gonna get us our outcomes. So those are the check marks I would look for from day one. Yeah, and then there are a lot of other things that I could mention along the way. Maybe, even the cap table kind of healthiness is something that we look at as well as initially, right? So that the founders own majority, of the company, at least at the stage where we come in, that duo owns 70, 80% of the company is something that we really need, because we come in for a really long-term play. We look at this at the 10-year horizon or so, typically 7-8 years for a company to really reach a certain size. So we need these incentives for those founders to be there, over the long term, and for them to actually have a meaningful stake to continue building the business. So those are, just some of the things. I think there are many more, but I'll mention them along the way.
May you slightly uncover the real process in Vendep Capital? Okay, let's imagine you or your analysts prepare the investment memo with all the red flags are cleared, all okay. Some concerns, as usual, some strong points and some weak points. At last, so your conclusion, okay, we can decide at investment committee to invest or not to invest, but this startup is investable. And what's next? Let's say investment committee is sitting around the table, and what? They are relying still on their gut feeling or on the papers?
I mean, at the end of the day, I think it is gut feeling, to be honest. There's no magic to it. Those checkboxes are just our initial filters to maybe filter some things out. But at the end of the day, obviously, when we sign the deal and put the money in, we still don't know, how it's gonna. It's still, I think, gut feeling. It's as I said, maybe some of those things are just de-risking the investment a little bit. Just making sure that you avoid some of the risks that could come along in the journey. So that's maybe a small part of how we try to be diligent in this case. But it's still, it's a high risk investment, so we still, we take an absolutely high risk here. So yeah.
So, but may I ask, let's say you have some people on your investment committee. I don't ask you about the exact number, but will they vote?
No,
And
they
then
will
count?
not vote. No.
What is the real practice?
It depends on the VC, but in our case, it's basically I am at the point now where I can, I find a deal, I can put it onto the table, and I can push it through. So, if I have enough conviction and I can convince the team that we should invest into this, typically it requires it doesn't require really a formal vote, but it just requires, yes, we've thought this through, we've kind of been diligent about some of these checkboxes, and kind of we see the path towards a venture outcome here, and yeah, that's why we would do this. I think for us, to be very honest, I think the real kind of blockers are, these checkboxes are just those initial things, but the real blockers are things that I mentioned initially, like, can we see that this becomes big? Is there a defensibility in the product? Can this play on a global field? Because, I mean, we are competing here against, US startups, US companies who are absolutely competitive and aggressive. So this is a very, very tough play. So I think we spend more and more, most of our time, to be honest, just thinking about, what the upside here could be rather than minimizing the downside. That's kind of our play, typically as venture.
That's interesting. I heard from two different VCs, a friend of mine, but doesn't relate to each other, actually. Very surprising thing. When they have an investment committee, and when, let's say, all members of investment committee says, yes, we will invest, all of them, that's kind of a problem. Because if the winning of this particular deal is obvious for everyone, something is completely wrong in the very fundamental case. Because if all people see and say, yes, we have to invest, so something is probably not enough risk or not enough reward if everything will be successful. So it may be kind of a problem. Surprise, but true. Waldemar, what about your system and your intuition? As an angel investor, you definitely, as me, as myself, you trust your gut feeling much more than numbers, check boxes, and any kind of the system. Let's say no red flags, because when you have some, it's obvious. No red flags, everything looks great, but your intuition says that something is wrong. I won't be investing.
I'd say I thought about two parts of my answer to this question. First part is why I like co-investing with VCs. If you want to play safe and you really want to get something out of that, you heard how VCs are thinking that through, and they're investing only in the best. So co-invest with VCs, and that would save you a lot of unnecessary things you don't know how to measure and how to estimate. So co-investing with VCs is really the safest strategy, I would say, for angels in general. But then again, if you want to play angel and have have a little bit more passion and fun into that, and then you can build your own strategy or not. And it's I've spoken with I'd say dozens or hundreds maybe of angels over those years, and mostly everyone has their own considerations, strategies, and preferences. So, and I think you're right that it's gut feeling. The question is about what? The gut feeling about the product. It's very exciting. It will sell well. Are those great founders? For example, I'm usually connecting with founders if I feel like some sort of passion for their behavior, their energy, something that already gives them advantage over the others. So it's a question what drives you, and what drives you, and what.
So you are looking for similarity, first of all, to you, your way of operations, let's say, your
I guess-
ideology, how you see this world.
I think so, because angel investing. I don't think that we can talk seriously about angel investing as serious financial investing strategy. So I think there are different other assets which are, I'd say, with better returns and guaranteed returns. So angel investing is something a little bit like a game you play for some reason, and I think as far as I was talking to angels, and I can relate to myself as well. There is another motivation, not behind, but in parallel with financial expectations, which is even maybe stronger.
Agreed. But you know what? I have at least 2 cases in my closest network of friends of mine who made very, very significant money out of their angel investments.
So those are 2 out of how many?
Good point. Out of, let's say, several dozens, probably even several hundreds. That's right. But once again, multipliers were really great. For example, it's not the secret that our friend and member Nikita Mania, he made more than million out from 20K investment into atom mobility. So it's 67x multiplier, something really huge. And why not? You put significant money, 20,000, it's still, let's say, half or 1/3 of a good car, for example, good new car. But if you succeed, you're getting more than 1 million euro before taxes. Okay, before taxes. And the second case, my friend in Central Europe, in the Czech Republic, he put 50K into the startup called Deal. You know, this company, it's providing the employee of record service for distributed teams. He put 50K and he sold his secondaries for 3.5 million, once again, before taxes. Very good result. 70x multiplier, right? And that's the kind of the deal I want to get at least once in my business angel career. Guys, some questions to the audience, because I'm afraid you're getting bored or not.
Kirill, you can tell about
Not yet.
answer your question yourself maybe before that. About gut feeling and strategy.
Yeah,
Because
here
you're
is
famous
my personal psychological problem. I'm very systematic guy. I completely avoid any risks, any kind of. So venture investments and angel investments is my, how to name it in English, the only point when I'm ready to take any kind of the risk completely.
When you go silly. That's in English.
I don't know. For example, to be very clear and transparent, I'm putting 80% of my personal investment money into public stock market. And I'm very accurate, as I said, at this point of investments. And I'm doing not great, but quite good. So less than 20% of my investment money going to startups. And as I said, I got less than a quarter, less than 25% currently as a return on my investments. Once again, I still have some hope to get a bit more. Okay, so I want to ask next question with a very...
Don't rely on your gut feeling at all.
I don't rely on it, I trust it. That's completely 2 different things. You know this joke, can you play violin? I don't know, I didn't try it, but I hope so. So this kind of not relying, but trusting. I trust in my gut feeling, but I don't rely on it. Let's check this question on the different angle and different side. And first of all, I want to ask this question to Artis. Did you saw in your career, in your experience, that some mistake or wrong decisions or wrong negotiations that made in earlier stages by business angels that probably invest or not invested in this particular startup that ruined their next fundraising potential, for example. So me or Waldemar did something crazy wrong, and so the Vendep Capital will not invest in our this particular portfolio or startup.
Yeah, yesterday I did.
Wow, can you share details?
Yeah, but it's I mean it's very I think it's very hard to maybe make wrong decisions business-wise because you can turn them around. But something that I mentioned before is the cap table. You know, yesterday I looked at a Danish startup and they had an angel that owned I think 17% of the company and had put in 2 convertible loans in there. I don't know what the terms were, but basically you can imagine that that angel, once those convert, would own something like I think 25% of the company, which is for a passive investor who's not operating in that company a absolute red flag for us. We can do some sort of restructuring and negotiate with angels to take the stake down. I think we would be comfortable with something like up to 10% maybe, but it's just it's an absolute blocker for us to do any deal because, as I said, you know, the incentives need to be there for 7-8 years, and for really either VCs who would participate with more capital or then operators who are employees that the founders would hire down the line to have that part of the shareholding. And if an angel owns 25%, I think that is a big blocker for those things to happen. So that is the example, I would say. Then, as I said, on the business side, I don't think I have come across cases where angels ruin something, directionally in the business or anything like that. Everything can be turned around, but the lasting effect on the shareholding is the biggest threat I've seen from angels. And we've done, I think, 2 cases where we actually have restructured cap tables. So we have bought out some angels who own more than we would like.
In a, let's say, polite way or impolite way?
No, obviously it has to be polite because I mean they have to agree.
Not necessarily. I will share my own experience.
You
later.
can share, but I think really we obviously have to do a lot of work. But I think the biggest work that we have to do is just to say that this is the best for the company if you want it to reach a certain stage, because with that shape that it was in, it would reach maybe the next round, and then most of the company will be owned by investors, which is already an end of play. There's no much more room for founders to be incentivized to build anything bigger. So yeah, I think in both cases actually it was a lot of work, a lot of talks, convincing angels that this is the best for the company if you want it to reach venture outcome, and it's been a mutual decision to cut the shareholding.
Okay, so to put this detailed information for our audience and for new coming business angels, what are the exact numbers that clearly says the cap table have been ruined by early angel? Let's say numbers, just numbers. You said 25% or 17%?
Yeah, as I said, something closer to 20% is a red flag. I think 10 to 15% is something that we can work with, but it's already aggressive. We see because knowing how much angels put in the money for that kind of stake, it's not like it's gonna make a huge change to the company to reach its next level. Let's say that is a Series A round or something like that. So I think ideally we would see something like 5 to 10%, maybe even less than 5%. That's perfect if it's a couple of angels there. But anything above 10% is already raising our eyebrows. That's probably what I will say.
That's great. I want to agree on one hand. On the other hand, venture capital is full of exceptions. For example, you said that those kind of angels were, let's say, passive investors, not operational ones. But there is a name as a founding investor. When investor is putting some money and even much more hands-on efforts into operations. And I had 2 clear examples of when it was quite successful. Not huge history, but a particular one. A friend of mine, he invested along with his second partner. He invested small amount of money. I don't remember the exact number, but less than 500,000, much less. Let's say 200,000, probably 300,000. And they took 25 or probably even more percent out of the equity of this startup. It was not convertible loan, it was not safe investment, it was clear equity deal. But they were very hands-on, not just strategy, not just finance, but also some kind of operations, helping with human resources, with recruiting, and which is even much more important, actively helping with the network for the next fundraising, the pre-seed after angels round, and then seed after pre-seed. And it happens then these startups have been sold for not very great amount, just for 55 million. That made the early operational angels, the founding investors, multimillionaires immediately. And it didn't ruin this deal because all the investors earn their money. The pre-seed participants earned, as far as I remember, about 10x, and seed round participants earned 3.5x. It's much less than 10, obviously, but it's still good return on investments because this return have been made in less than 1.5 years, 14 to 15 months, as far as I remember. Quite good. And you know what? Those guys took their break, founding investors spent some time playing with the stock market, and exited founder working his continuous contract after M&A deal. And after that, they announced their new venture just 2 days ago that it immediately got $9 million $9 million seed round investment from tier 1 world investors from the United States. You see, 9 million investment during seed stage means that they were valued not less than 40 million pre-money, probably even more. Good point. So it's kind of reward for the previous, let's say, humble success.
Yeah,
Voldemar.
can I quickly comment?
Yes, please.
But I think that's the reason why I put the disclaimer in, because in this case, the 55 million exit is an absolute failure for us. We have to return, 80 million euro fund. Even if we own 10, maybe 20% of that, we return what, 10 million out of 80 million. It's, it doesn't move the needle for us. So that's why I'm saying, we need the upside much more than that. And yeah.
Agreed. And here you can see the second very important takeaway from this current discussion. What is good or even great for business angel, probably not so good or even the fail for the early and mid-stage venture capitalists. So it's kind of the difference between you and us.
Yeah, exactly. I 100% agree, but just want to put it out there. Yeah.
Great.
Yeah.
Voldemar, what's your experience? Did you ruin any negotiations or any future for your portfolio startups because of mistakes made at the very early stage? Or it's not from your personal experience?
I hope not. I can't recall any. I can only recall deals which I passed, which turned out to be good. That happened multiple times, and it will happen again and again. You can't invest in every case that turns out to be good. And I for example, I turned down Printify twice.
Twice, kind of a record.
And when I think about that, if that would happen, the same situation again. But with my knowledge, I would turn them down again. Because of the.
Can you elaborate on this? Because of what? What is the reason?
Lack of my expertise in print on demand, first of all. Back those days, I didn't see that as a potential when they were playing around with that idea. So I didn't, and yeah, I think that's the main case. And I was approached at very early stage. And second time when they visited Latban with the pitch also was very early stage. They had something, but not yet.
What was the year?
2016, 17.
16, 17, right?
I think
yeah.
so.
I guess so. Okay, that's very interesting. Okay, on the other hand, if you have good but not great portfolio startup, and you want to help them with fundraising at, let's say, seed round, what can you do or what will you do to, let's say, forward this startup to Vendep Capital and to convince them to invest into your portfolio startup on the next round? How can you help and what will you do?
I think it starts with formulating a fundraising strategy, helping them with fundraising strategy. And then that would be the first step. The second step would be not committing to be their fundraising manager. So they have to fundraise themselves as CEO or dedicated manager. So it doesn't rely on myself. But then point three, I would work with my network of investors and people to support them.
So this idea just came to my mind before I switched in 2025 completely to my new business and started less of efforts and time to Latban. I participated every year from 15 to 20 different venture conferences across Europe, mostly in Eastern Europe, let's say across Central and Eastern Europe. You know what surprised me a lot? A lot of angels spend and still spending their time at TechChill, Latitude 59 in Tallinn later in May, any other conference, talking to startup founders. And frankly speaking, I cannot understand and explain such kind of wasting time. Because if you're an active angel, you have to spend your time at conferences talking to early stage venture investors, making your network with Vendep, First Peak, Superhero from Finland, any other regional and European fund. Because you can talk to founders easily over Google Meet, Zoom, doesn't matter what. But at the conference, you have to drink with venture capitalists or fellow angels. Why not? Otherwise, you're just wasting your time at the not very cheap conference. Frankly speaking, did you see the early bird prices for Slush this year? They started for investor ticket with 925, and they're very limited early bird tickets. Now probably it's getting to 1,000 plus.
So the takeaway from what Kirill said is every conference has investor day and dedicated investor events. So have your investor ticket and attend investor day.
Very good, exactly what I meant to say, but not necessarily at each and every conference. For example, please don't forward my words to TechChill team. This year, Investor Day was kind of crap. Sorry, but I have to say it out loud once again. It was awful because Investor Day is for investors. They brought their 6 or 9 promising startups to pitch investors on the stage. And once again, they wasted a lot of time of the participants because we were intended to talk to other investors, not to listen to pitches. There is the day 1 and day 2 to see the stage pitches, but day 0 is for talking between, let's say, investors and VCs. That's my humble opinion on that. You can make yours, but that's what we have. Questions from the audience, please, because we are moving to the end of our discussion and we've got only 2 or 3 questions from you. Yes, please.
How do you decide if you want to be a lead investor? And when do you just go along with others?
And if Ansis is still in the audience, he can join this answer. I can start with my own very brief answer. First of all, I clearly decided in 2024 not to be the lead angel anymore. After 7 deals I led as a lead angel investor, I completely stopped this practice because of 2 things. First of all, as a lead angel, you cannot get more out of this deal than other angels are getting. So it's not polite, it's not ethical. You cannot take as a lead angel the setup fee, doesn't matter what. You just can collect some money to pay to analysts to get the good investment memo or investment analysis, first. And second, you don't get more than other angels, but you feel much more responsibility because you talk to those guys, you convinced other angels to consider joining or not joining. Sometimes you're pushing them several times. Are you investing? What's your amount? We want to write check to this startup founder, and you still didn't decide how to invest. So I stopped it. Waldemar, what's your opinion on that?
I got the same experience that it's not very rewarding to be a lead investor, and if something goes wrong, nobody blames you, but still, still there's some uncomfortable, let's say, feelings in the room. But my situation is, therefore, I made my situation much more simpler. I'm usually the first investor and the only.
I'm the only one. Okay. Okay, I want to ask last very brief question, and then we can continue with the questions from the audience if we have some. If not, we can move forward. Let's explain to ourselves and to our friends very briefly and clearly what you have to do in 3 moments. Right after you transfer the money you did in investments to this particular startup, immediately, what to do or not to do 1 month later, and what to expect, let's say, after first 3 months. So, Artis, what's your practice?
Maybe you guys want to start, because I think we have a bit of a different process, you know, of how we. But I mean, I can offer this our point of view, because I think it's just so different than angel investors. But so we are typically coming in as a lead investor. Just to say this, that means we actually put a lot of work into the deal and due diligence and kind of leading the terms and drafting the terms of the deal. We spend a lot of time on that. And that means that actually we take a lot of active role in the post-investment process as well. Obviously, formal things are forming a board, first of all. I would say pre-seed stages, that's less common to have a board, but at seed stages where we typically play, we form a board. So that means maybe 2 founders, us, you know, as a representative from venture side, and then perhaps an independent board member is there as well. So that's one of the things we try to formalize post-investment, and I think we do that at most of our cases. Maybe just to tie in the angel role here, and I think that's where I've seen actually angels add most value, is actually being one of that independent board member, because I think offers a good balance, especially maybe if you have industry expertise in that particular space where the startup is operating. And I think in maybe 3 or 4 of the boards I'm sitting at, the angel is actually a chairman as well of the board. So kind of keeping close with the management on just the admin stuff and making sure that reporting is done on time, and kind of just being a sounding board to the founder. Yeah, maybe that's an example of how I really see angels play a role there. For us, yeah, as I said, we form a board. That means that, yeah, we have some sort of cadence in place post-investment where startups kind of report on their progress, whether quarterly or sometimes it's monthly check-ins. I think another thing that we really try to put very early on in companies is some sort of reporting system with metrics, so that we actually know what month-over-month numbers look like, revenue-wise, cost-wise, you know, cash flow, burn-wise, you know, how much cash is left in the bank, how much runway do you think you will have. So those are, I think, the 2 immediate things that we do when we sign a deal and all the docs are formalized. Yeah, maybe I'll then give your perspective. I can expand on some other things, but yeah, these are the 2 most immediate things.
Okay, let's pass microphone to Waldemars and listen to his opinion.
Yeah, currently I'm an unusual angel, right? As I said, I'm sort of more like founding angel, acting as founding angel, because that's more fun for me. So my strategy is that I typically do a homework before with the team before I invest. So, and the moment when I invest, we already have a plan that comes to execution and needs money. So the biggest work is before investment from my side. And then when I invest, so we execute. And I do 1 to 2 startups a year, because and then we have to execute together. From the beginning, I'm more active and passing all my knowledge and resources to the team to enable them to accelerate them in order to decrease my activity in a year time. So my target is to remain as a sort of strategic advisor or board member if necessary after a year, but not being involved in active operations. That would be my strategy.
That's great. That's really good. What I think about this topic, first of all, in most cases, angel do not have informational right in a startup. But it's kind of a good practice that startup founders are regularly reporting to all investors, including the early angels. So for most of the cases I saw in my practice, if you shake hands or have a written agreement about the reporting frequency, for example, detailed quarter report and very brief monthly updates. When you as an investor, as an angel, start understanding that the next report has been delayed from the startup, or if it is significantly shorter, significantly briefer than previous times, it's a clear sign of the first problem. Extremely clear sign. It may be a hidden problem that probably even the founder cannot articulate. The real problem, he afraid to report to his investors, or just lack of progress, lack of new traction. And the worst thing you can do in this moment to start putting pressure on a startup founder, asking, where is the report? What's going on? We agreed about regular reports. You are, let's say, breaking this agreement. What is much better to start politely ask questions. Okay, guy, we're waiting for a new report from you. How is it going? Do you need any help? Can we suggest something? If you need some more time to prepare this report, don't spend it. Just call me and say what's going on. No preparation. Otherwise, you can make this kind of call on your own without, let's say, special notice beforehand. Just take the phone, call him and ask, how is it going? Any problem? Can I help? And if yes, with what particularly? And you will be definitely surprised how much the founders need the real, simple human support. Emotional support, informational support, or just, let's say, the advice from the more experienced guy. Okay, problems is the real default state for every startup. Do you agree?
Yeah, I just wanted to add as well that there are these 2 points where I've seen, at least as a venture investor, angels play a big role, and that is, as I said, the board member and the chairman, and then the other is, as you alluded, just being a contact that a founder can call, typically open up doors to customers or anything, partners, some other contacts. That I think is where angels have played the biggest role, because we as VC, we maybe not necessarily have the industry knowledge and cannot open the door, so we play maybe the big game with the numbers, but I really think that on the human side, angels are really, really valuable, kind of parts in the cap table that we very often utilize a lot for, just asking their opinion or just in general, if they can open up some doors. That's what we really appreciate. So yeah. And I must also say, and that's the reason why we love angels. Actually, most of our deals come from or not most of our deals, but I think at least 1/3 of our deals actually have come from angel investors. So, they being, with the founder, developing those early relationships and introducing us to the founders. So I think, yeah, those have been very valuable connections that we have built with the angel network around the region. So yeah.
And yeah, I wanted to add about maybe what not to do. So what I said about my action, that's ground zero, like zero stage. But when you're as an angel investing already in later stage, like starting from pre-seed, seed, so don't get into operations of the startup. So
Even if they ask, even the founders ask.
no, if they're asking for help, of course, but that would be sort of already pretty. So you can help them on let's say on project base or some sort of strategic or door opening or funding, but not in operations. So if you have to go into operations, that means that you made the wrong choice choosing the incapable team already. And the second problem is that sometimes, which I've seen earlier, especially in previous years a lot, from established entrepreneurs, is a wish to change things and to do things my way. For example, that's why I moved to earlier stage, because I have that that drive to build business, and which is not compatible with the later stage when the team has already established operations, business models, and actually they don't need your business input in their operations, and that also coming back to the question, what can go wrong? How can angel damage the situation if he has for example, I've seen examples when angels take a greedy big stake in the company, and they are aggressively impacting the operational decisions, strategic decisions, but they frankly speaking, they lack particular expertise the founders do. That might take the startup astray and to the wrong direction.
So this micromanagement kills like the person.
Not just micromanagement; it could also be a strategic advices that that probably angels, which are not experts in particular field and in particular company on daily basis, might get to the wrong direction. So by saying that, I would say that the dream investment is that you're looking for the team that is capable of building and executing without your input. That would be ideal.
That is my dream as well. Yeah, that's.
You are there for the money. That's for it.
Sorry?
You are giving the money.
Yeah, money and some PR in fundraising, some visibility among your network. That's a perfect investment, so that they don't need you, need your operational input.
Do we have more questions from the audience, please? If not, we can move on. Yes, please.
Questions. Of course, we have heard that there are many times about red flags, but maybe you have some additional red flags. Of course, we know single founder, broken cap tables, things like that. But, and also, maybe each of you could comment the optimal number of founders. Because, yeah, as far as I read, it's like 2, 3 sweet spots. But it was hard to prove.
For most cases, I see that 2 or 3 is more than enough, actually. Definitely not 4, because in this case, it's just, let's say, not very honest composition. Because why those 3 guys need the 4th to join the founding team itself, actually? What is his greatness in what? Because 3 needs fourth guy to join them as a founder from the very beginning. And for case of 2, it must be very clear who is the leader and who is the second one. Because if you see 2 equal leaders, you cannot expect that they will go till the very end building huge business with a huge exit. Probably they will part their ways once again and probably ruin the startup itself.
Yeah, the perfect number, I guess, is 3, 2, 3, 4. Maybe in some cases, the most important is that it's not 1, and that the 2, 3, or 4, or 5, that there is a logic behind that. There could be cases that 4 makes sense. There could be cases that 4 are too many if they sort of don't have specific competency, expertise role in the team. I was speaking about red flags. I think that this is very general, and you probably can find it in different files, let's say. But undisclosure of something, small lies, and that's small lies, maybe even unconscious lies, but that's a red flag for me.
Yeah, 2, 3 founders. That's I think the good fit. As I said, maybe with AI things are changing now, but at least if one is technical, or I mean, with AI anybody can become technical now. That's that will be the best fit. We typically don't like to see all business people just start this. Somebody needs to actually build the software or whatever solution that they're building. 4 is optimal as well, and I would say 5 is a bit too much. I think for early stages, just like a question is like why, what kind of roles will they fill, what the dynamic is. So it just becomes a bit tricky. I think maybe at later stages it makes sense that there is someone, not really a founder, but like a really management type that comes in to fill some of the roles. On red flags, yeah, there are many. I should have prepared. I have a list, of course, but something that, of course, comes to my mind, besides the points mentioned, I think I mentioned as well, outsourced development of software, outsourced sales, outsourced marketing. I think those are pretty red for us. We like everything to be in-house and make sure that the company actually builds all the functions themselves. I think another big one for us is just being close to the customer as well. So so what I'm saying is a fancy deck towards investors, and saying that they will get customers in a couple of weeks or months. It doesn't work for us. We really need to validate that you are actually out there going in the market and selling what you're building. That's at least for us as VCs. And then again, some sort of revenue that's consulting. It's a bit of a yellow flag, not really a red flag, but just making sure that they're building something scalable, right? That actually can, scale besides just, having human resources, do the actual work for the client. So those are maybe some of the additional things.
Thanks, Artis. I think we have to move on, but still have some room for one more question, if you have.
Yeah, question. What do you think about the pitches from educational settings, like educational programs for startups and university incubators? That's serious?
Yeah, thank you. That's my territory. Yeah, I think if you're educated in that stage of startups, so you can compare easily the talent there and the ideas. So if that would be your first time hearing incubator pitches compared to, let's say, seed pitches, you would say that everything is very bad there. But if you have experience there, then you can start sorting them.
You mean you can find good cases there?
Yes.
The last question from the first row.
In which industries you prefer to invest in 2026 and in all sectors?
That's a extremely tough question, because, you know, a lot of sophisticated and wise people, they started explain to each one quietly, not in public, that there is more than a year ago, that there is no more reason to invest in software-driven startups, because the latest in 2027, creating a piece of software will be just, let's say, minutes, and the good prompt from the customer. So if you can create any kind of software in minutes, what is the reason of investing in the software startups? So it's still not true. But I have no more idea. That's why I took a break from angel investments and want to see what's next.
I think the same process as you described, large language models and machine learning, AI, everything is so accessible that enabled many other industries to come up with different solutions much faster, much quicker, and solve problems that previously has been unsolved or very expensive or lengthy. For example, as I said, I'm working with biotech and biomedicine, and I see a huge acceleration in terms of solutions and products that are enabled by accessibility of machine learning and AI. And I think that that's true also for different electronics, microelectronics, and other deep tech startups, which previously very dependent on highly expensive, inaccessible infrastructures of coding, of modeling, and stuff like that. So that's been solved now, and would make a new wave of deep tech startups which can scale much faster, and probably are going to change industries and verticals they are in.
Yeah, maybe a bit of a different perspective. We still love software, and I'll tell you why. I think Sequoia, one of the VC investors in America, that's very profound, put a statistic that for every €1 spent, well, I think that the reasoning was most of the companies, at least in the US, for €1 of spend of software, €6 actually are spent for services or labor. And we think that this is a massive opportunity, because this is going to flip the script the other way around. The software spend will just increase, and now there are so much labor budgets being available that are becoming software budgets. So we are doubling down on software a lot. Obviously, the game is changing, so the rules are changing. I agree that there is a layer now where many things can be built very easily and copied easily. So obviously, the race becomes tougher and competition becomes tougher, but we are still exploring what the new differentiators in this market look like, but we see that there are these budgets available, and we are really going after them. So yeah, that's.
I can agree to that, and because nowadays everything is either software enabled hardware or hardware enabled software, so it's composition. Yeah. So software is everywhere, anyways.
Yeah, exactly.
Okay, ladies and gentlemen, we're running out of time. Round of applause to our panelists. Thank you so much, gentlemen. I want to take your attention for 2 more minutes. First of all, to conclude our long Angels course. Where is my clicker? What's next? First of all, Emils will share all the recordings, all the stuff to you over email or in a messenger group. Then, next, we will be keeping you updated on the startup due diligence that are currently in progress. And as for the certificates, I don't know about you, but I love diplomas, certificates with my name, anything else I can post on LinkedIn and say out loud, I completed, or I graduated, or I did it. So if you will be doing this on your Facebook profiles or LinkedIn profiles, kindly please don't forget to tag Latvian Business Angels Network to mention that you participated in a LATBAN organized event. And jumping forward, please, if you can, say thank you to our supporters, is SEB Banka, Ministry of Economics, and Riga Investments and Tourism Agency. I must say that actually they are supporting us a lot because organization is live, operations are going forward, and unfortunately everything costs us some, or not several money, but the significant amount of money. For those who are already members of LATBAN, on May 11, we will have our next event. It will be started from the annual general meeting, so I will invite only those who are members already or will join us very soon. Otherwise, the second part of the event will be open for participation for others. Please do that. And I want to invite to this stage our chairman, Ansis Spridzans, to say some words about decisions you are going to make very soon.
The most important thing I have to say is that actually the first version of this course was done by Kirill. It was already 2023, yeah, quite some time ago, but now the course has evolved in some way. So thank you all for coming. Important thing is that you have paid the deposits, and so your one of serious and important decisions is what to do with that money. Either you take it back, please contact Emils in this regard, or you leave it as a membership fee for LATBAN. So these are the options you have. So yeah, and yeah, so that's the main decision for now.
Can you please remind that the full membership for a year is 400?
Yeah, so it's
if
great
you decide
discount.
to take your money from the table back, then you will be paying 100 euro more if you want to rejoin.
So we are here for great deals, actually. Big, beautiful deals. This is one of these. But anyway, big thanks also to SEB Bank and Ministry of Economics. And actually, this is really important that actually the situation has changed during, I think, last 3-4 years. Before that, there was absolutely no support from government and also from Riga. But now situation have changed. The government and also Riga see that investment is really going through the business angels, and they are also supporting these organizations. So thank you for you, and thanks for them.